Well, Howard, it's really nice to see you again. I trust you're keeping well as we seem to be coming out of the pandemic.
Yes, it's good to see you as well, Rodney, and we're certainly staying healthy and pleased with the progress and in emerging from the pandemic. So it's good to be with you.
Yeah. Now, you lead KPMG's Global Tax Restructuring Services Group. So I'm very interested in hearing from you. What are your expectations in the months ahead for restructuring really all over the world?
Yeah, good question. Our expectation is for an increase in restructuring activity as we emerge from COVID and the government stimulus and aid starts to subside. And I think we will also learn about which industries have been permanently dislocated as a result of the crisis that we've gone through. If we look at this by geography, in the US, last year we had an initial wave of bankruptcy filings across all industries, some very large filings, many $1 billion plus companies filed for bankruptcy. In the EU, for example, we actually had a decrease in the number of business bankruptcy filings in 2020 versus 2019, which is very counterintuitive. And the speculation is that that was a direct result of government aid and certain limitations imposed on creditors in terms of taking action. So we certainly see in the EU, for example, the potential for increased restructuring activity. If we look to Latin America, I think there's an expectation of a volatile recovery, a financial recovery. In the Asia Pacific region, I think it's going to be very client specific as to how this all plays out in terms of the company balance sheets and the level of debt and how it gets managed. And then I think it's also important to note that as we do emerge from COVID, in the U.S., the levels of corporate debt by any metric are at the highest levels in U.S. history. Corporate America has emerged from the pandemic more indebted than it did going into the pandemic. And how this debt gets repaid, refinanced, given a potential for rising interest rates, I think remains to be seen in the months and years ahead. I think also we've heard lots of commentary around the quote zombie corporations. These are the companies that have no real ability, best we can see, to actually ever repay their debt. And now these are companies that are really just solely trying to service the debt, but have no real prospect for repayment. So how these quote zombie companies, how this plays out with their debt levels also should be interesting. It remains to be seen. So these are unprecedented times, very difficult to predict how this will all play out. But we certainly have interesting factors and currents and cross currents that are in play right now.
So that's really interesting, Howard. I mean, that speculation about Europe and maybe the beneficial impact of government efforts, right, probably played out in a lot of places around the world. And I guess if we've learned nothing over the last 15 months, right, since even before the pandemic times, the capital markets seem to be able to move very quickly and sometimes in unexpected ways.
Yes, yeah, that's for sure. There's been no shortage of surprises. I don't think a year ago we could have predicted where we are now in the capital markets. There are going to be a lot of factors that will influence the capital markets, I suspect, in the months and years ahead. Certainly tax policy will have an impact on the capital markets, the allocation of capital globally, and through that, the ability of companies to refinance debt and terms and interest rates. So for sure, a lot of unknowns, a lot of uncertainty, and it should be very interesting how this all plays out.
Well, I look forward to catching up with you again, Howard, just to hear how, in fact, it did unfold. So, look,
I do as well.
Really good seeing you again, Howard, and I look forward to seeing you in person again. Next time I come to New York, I guess. So thanks for your time.
I do as well. Thank you, Rodney.